Welcome, everyone. So, here's a quick news breakdown on the Canadian news that we have in about 15 minutes. So, looking at the Canadian Bank or the Central Bank of Canada, there's a few things that we want to look at in terms of their goals, the future of what they want to achieve when it comes to how they manage currency and the strength of currency. Um, at the moment, so if we have a look at this, we can find out right now. So, if I go to the Bank of Canada, at the moment, uh, still remains unchanged in March, but we have the interest rate at 25 base points or 0.25%. Okay. And total CPI inflation at 1%. Okay. Now, with the interest rates being so low, as you can see, even as it says here, many of the banks around the world, in fact, all of the central banks around the world, okay, have cut their interest rates to a very small degree. Now, we know the Federal Reserve, because of the structure of the world economy, with the US dollar being the world reserve currency. Okay, every currency is, in a sense, backed by the dollar, and the dollar is backed by fiat. Okay, which is for another conversation for another day. But just speaking of that economic structure, when the Federal Reserve cuts their interest rates, then every other country will follow suit. Some have lower interest rates than the 25 base points, but I believe many countries do have this 25 base point interest rate in place, and this is to help the economy make money cheaper or currency cheaper, to kind of keep the economy alive. Okay, because if the interest rates get too high, it's going to cause a bigger issue because of the COVID situation, lack of employment and etc. Okay, so when we look at what we have now, we have two pieces of news. So if I go to the economic calendar, all right, so we have the bank of interest, we have the rate statement, and we also have the interest rate decisions. And as it says here, and I agree, okay, I'm expecting now the previous figure was 25 base points or 0.25%. All right. And the consensus is that it will remain the same. Now, because of the COVID situation, things haven't completely opened up everywhere in the world. Now, saying that, even though there may be unchanged interest rates, it doesn't mean that we won't see any strength or any price movement, on the Canadian dollar moving forward. Now, for me personally, I'm bullish on the Canadian dollar as a currency. And I believe because of the currency itself or the country itself, what it has. Now, the Canadian currency or Canadian dollar is what we would consider a commodity currency, okay? Meaning that a lot of its GDP or quite a huge chunk of its GDP comes from what it exports, in this case is oil. And so we'll see this correlation between oil prices and the Canadian dollar depending on, you know, how the market is and different factors. But usually there is a very, very strong correlation between oil prices and the Canadian dollar. Okay, generally when oil prices go up, that is good for Canada because their exports become more expensive. So that's price positive and profit positive for the country. Okay, and therefore their GDP will go up, which and then will increase their strength of their currency. Okay, so if we take a look at a few things now, if we look at this from the aspect of, let's say, some price action. So I have CAD CHF here. Now we are in this bearish bias. Now maybe what I might want to do here, let me see if I can pull up a few charts. Now one of the best charts to look at is, pair correlation charts. And we can have a USD CAD, for example, or use USD CAD, okay, has an inverse relationship with, let's use Saxo, so we have a bit more time back, with oil, okay, in some cases, not all the time, okay. Now, USD CAD, when we look at the price action of what we have here, and then we pull up, we want to look at the price from different aspects. So when it comes to the base rate decision, I believe it will stay the same. Simple reason is because we're still in a COVID situation. Okay, the world economy hasn't recovered. And the effects of COVID, some have been seen, but some also uh, will be seen after, the vaccination, I guess, has gone out and everybody's vaccinated, or however, they presume a resolution to be so. So if once the resolution has come along, then we're going to start to see uh, the real effects of COVID on the economy. Okay, because you have to remember, when in this situation with COVID, we've had stimulus, and if you look at a video I talked about in stimulus, and one that I'm going to do in the future. Stimulus is a short-term fix. Okay, so if I write this out here, you know, one of the features of COVID that we've had, if I can get a text box out here, let's get some text going. So one of the biggest things when it comes to the COVID-19 situation is we have stimulus. All right. Now, stimulus entails quantitative easing. Okay. Now, whenever we have a financial crash or a situation of this, you know, magnitude, so quantitative easing, quantitative easing. Spelled that wrong there, but correct me. Missed out a few. Quantitative easing. Sorry about that, guys. We want to make sure we get the spelling correct. All right. So quantitative easing, whatever, QE. All right. Now, quantitative easing means a few things, but one of the major things that it's going to mean is that we have currency devaluation. All right. Now, opposed to what we had in the 2008 crash, all right, when we had the bailout because of the situation with the subprime mortgages, there was, you know, help given or stimulus given, but it was more for the private sector. So this was in the internal structures of, you know, banks and etc. So they were bailed out, but the public were left to lick their wounds. In this case, with the COVID situation, okay, the private sector still has always been protected, but this time the people also are receiving stimulus, you know, because we have a situation that hasn't happened in probably a whole century. And so the situation is different as to how we approach, you know, the price of things. Now, for this reason, quantitative easing and currency devaluation always go hand in hand. If you print more of a currency, you print out more notes, it becomes weaker, the scarcity goes down even more, and the strength goes down. Okay. However, these are the factors that we're looking at when it comes to stimulus. So this reason, they must keep interest rates low to account for such a thing. Okay. So this is what we have when it comes to stimulus. Whenever there's a financial crash, government policy or, you know, central bank policy and fiscal policy become one. Okay, you can't tell the difference between the two. So this is what we want to look at when it comes to the price action of, you know, different, you know, moving forward when it comes to the price action and the fundamentals. We need to keep these things in mind. Okay, when it comes to stimulus. So with the Bank of England, Bank of Canada, Bank of Japan, interest rates will stay roughly around the same. Now, Bank of Japan is slightly different, but the interest rates roughly will stay the same until there's a real defined, you know, change, or we can say a defined goal set around the world as to when they declare the COVID situation, you know, receding or appeased, because there are some countries who are still heavily affected more than others. Okay, so when we look at the price action, you know, to follow with the Canadian dollar today at 3 o'clock, whatever news comes out, we may have some spikes. The price may do a whole load of things. But overall, if you look at the bias of the price, now the bias of USD CAD on the monthly is bearish. All right. Now, for those of you who are my students, you know that we have a double top formation. So we have a liquidity pool here. So I still think we could potentially get a long to take these highs and have a proper C swing into supply. You know, if we do some technical analysis here, we could potentially have that. Let's pull up boxes. Let me grab a box if I can get one. Sorry. All right. All right, rectangle. All right. So we have a supply zone here. Now the price made this liquidity pool right here. So we have many orders above the high, a lot of liquidity above here. So we could still get along on USD CAD, possibly. However, if we follow the bias, the price is heavily bearish and should continue in that fashion. Okay. And for that reason, we want to keep our eyes very closely peeled on what's going to take place, you know, in the next coming weeks, months, and not even years. Okay. And have a projection for going along here. So moving forward, if we talk about the Canadian dollar, this is not a heavy technical analysis. We're just looking at the price of things. But if I pull up this area here, okay, we have the Canadian dollar, or I'm gonna write this here. So the CAD is a commodity currency. All right. So I'm gonna put this here for you guys. Commodity currency. And since it's a commodity currency, all right, the commodity is attached to where its GDP is concerned, okay, is going to be oil. Now, looking at what's going on in the world, despite what I've said about COVID, and the unsurety, uncertainty, but one thing is clear around the world for now, that there seems to be a recovery on the most part for most countries. Some countries don't have lockdowns anymore. Some have local lockdowns. Okay, this theme has changed a lot from March 2020. So for that reason, it means the economy is opening up, the world is opening up, and which is a price positive for oil, because oil is a commodity people need for energy to be able to carry out many different types of activities. So if I put this here, you know, COVID recovery, all right, equals you know price, higher oil prices, because we have an increased demand. Okay, as the world is opening up, more flights are being booked and etc. That's the increased demand on the price of oil. So increased potential strengthening of the Canadian dollar. Okay, so this is what I'm looking at when it comes to the price action. What I want to see moving forward is what I'm expecting to see moving forward is this: as they keep interest rates low, as the economy recovers, interest rates will get higher, which will be possibly not necessarily good for the people, but definitely good for businesses, especially businesses that are involved in credit and loans and etc. Okay, so this is one aspect I would say, which is something important for us to consider when we're looking at the price of these assets of oil and commodities, even gold and things like that. But looking at this analysis to finish it off, if we look at, let's say, our stocks, so I've pulled up a few stocks. So the largest stock we have, or the largest stock we have in Canada for oil, I'm not Canadian, but I'm saying we as in looking at us as traders. If you look at the price action, the price is heavily bullish, okay, as it should be, because we have, increasing demand over time for oil, which is what this company does. Enbridge, top of the 10, largest oil companies in Canada. And we can see from here that the price has been very strongly bullish. Now we have a massive, you know, stop hunt of these lows here, and this is due to the COVID situation here. So COVID really just provided a discount price for those who are smart, for you to get back in and be able to take advantage. So we have a nice stop hunt here, nice spring of the low. What I'd like to see moving forward, based on that, is potentially the price moving from the 45s all the way up to this high, and possibly here, on the part of recovery. From a fundamental point of view, as the world is opening up, we should see the prices start to recover, and at least the price to get back to where it was before the pandemic situation. So around 2nd of March, as it's showing, February as well, February, March 2020. Having that would be fantastic, and we should see, some good gains all across board. If these stocks increase in value, I believe that the indexes in Canada will also increase, and which means we should see some price positivity for the Canadian dollar, which will be fantastic in, as a recovery. So moving forward from there, I mean, you can look at different companies. There are quite a few to look at if you want to compare stocks, but we're just discussing, you know, we have Suncor Energy, Husky Energy. There's quite a few, corporations. If you look at their price action, they all seem to be pushing towards the same way. I'll just pull up the second largest. So we have Suncor Energy. So if you look at Suncor Energy, I'm using the Toronto Exchange. Okay, same thing. You can see the same pattern of the price selling off very strongly for the, in the March situation, some lows being taken, and now the price seems to be making its way very strong. We've had this massive push in, of liquidity. So from November, we had some quiet months in January as expected, but in February had this massive push up with very strong bullish liquidity. Price moving forward, I'm expecting to see, some good recoveries in, over the year to come. All right. So we will see, I believe, a great recovery, and meaning a, very good strengthening of the Canadian dollar. Now we have the news happening in about a minute. Okay. and we can have a look at what's going on in the markets in that regard. So I'm going to pull up my charts. Let's have a look and see what goes on there. So currently I'm in a trade. We had a D1 stop hunt market structure break, and I'm looking for the price to go for algorithmic level at the low down about here. So my targets are just beneath here. So we want to see what the news is going to do. Now I'm expecting the spreads to increase quite a bit. All right. Now I'm not a news trader in the sense of straddling, but what I do like to do is to look at the news to see what goes along. And I believe that the price should give us what we want with a good strong sell. Okay. So it's 3 o'clock now. Price is within the equilibrium order block area. All right. It looks quite good. Nothing much has happened. Now we're in the first couple of seconds. So when price is doing whatever needs to be done. Now we may not have any reaction as well sometimes with the news. And this is important, okay, for you to know. I've noticed with the market recently that there's a delayed kind of signature in the price. And sometimes you get these pullbacks. Now, for me, if the price gets too far away, what I might actually do is bring my stop loss a lot lower. If the price wants to spike above, I don't want to take the risk of a loss. So I don't mind just putting my, my stop loss a bit tighter and re-entering to be safe. This is one thing that might be necessary for you to do whenever you're looking at the price of something. All right. So I might keep it here, or sorry, just above the supply zone. I think that when we look at, a lot of these Canadian pairs, there's very strong telltale signs across many of them of some impending strength. So on my MetaTrader charts right here, I do believe this is going to go short. If it does break above and continue, if I get uncomfortable with it, you guys know me that I'll be quick to close. So I'll set an alarm here whilst we're looking at the price. If it hits the alarm, then I might decide to just get out and come back again later. If it does do what I want, now it looks like the price is just using it for re-entry, but what I will do is let's do just a few pieces of analysis. So if I pull up EuroCAD, where are we? So EuroCAD, some interesting price action on a lot of Canadian pairs, and one of the things I'm seeing is these massive liquidity gaps from a long time ago. Now, if we look at EuroCAD, now not every broker shows this to you, but for the good ones that do, if you look at EuroCAD, you can see we clearly have a bearish structure. So here's the A swing, here's the B, and here's our C. We've had a market structure and a stop hunt situation going along. Okay, I think my alarm is hit, so I'm going to close my EuroCAD trade. Possibly. We'll see. So yeah, we got alarm's been hit. So what we're gonna do, when I look at the price here, we have this ABCD. Now, if you notice, we have a liquidity gap right about here. So this liquidity gap that we're seeing on the price is interesting to see that it's been left now for 10 years or in 2021, and the market has never filled this gap. So what we want to see moving forward would be hopefully the price giving us a massive sell. Now let's take off that alarm quickly. I think I've done it already. Where is CAD? All right, so the alarm's been hit. Okay, price seems to be pulling back to a higher point to give an entry. It's probably going to sell off after. But yeah, we'll leave that there. So coming back to this, if we go on EuroCAD, we have a look at what's going on. I'm expecting to see, some really good price action moving forward for a sell. Since we have the C swing here all the way down to the D, I'm expecting the Canadian dollar to really gain strength. Now, if we parallel to that, if I pull up CAD has something that is a play that our students are looking at the moment that we want to get into. Now, without going too much into the deep breakdown, but just you can see that we have these liquidity gaps here. There's another set here left from, the continuing pound strength from the COVID recovery. We have another gap here, which from where it is at the moment, we have at least, I would say, possibly, let's grab a little clue here. Yeah, at least 700 pips of a short, at least, which is massive, absolutely massive for, where price can go to from where it is at the moment. And so we keep seeing these same structures along Canadian pairs, you know, kind of like a market prophecy that I will be going short very soon, very strongly. So how that's going to play out would be the question we want to know. But I do think we are going to see some major price movement that is going to produce a very good future for the Canadian dollar. Okay. So just looking at those charts, we can see just very, very, this is not a technical analysis. This is just a discussion. We can see how the price action, can really be producing some massive longs. Now I've put another entry a bit higher up just to test out what the price is doing. Okay. We have a fuller piece of price action here. If it does do what we want, we go for it. Leading forward, as you can see, I closed my entry, and moving forward, we took another entry up here. Stop loss is quite tight, but we're looking at the price giving us some algorithmic levels. So one of the things with the news which I really love is that if you want to understand where the algorithmic levels are on the price action, so looking at algorithmic levels, seeing where the market order book is pushing orders to. Okay, I have some targets set, very simple targets here. All we want to see is this liquidity pull down here, these double bottoms. Now, most times retail trading teaching on YouTube and stuff is that double bottoms and double tops are reversals, which they are, but the way that they form, okay, is designed for you to lose money, because these double tops and double bottoms create liquidity pools because most retail traders trade the same way. And so that creates a pattern of price action, which the market makers can manipulate. Now, as you can see here, we have quite a good entry. The price has reacted accordingly. Stop loss is tight, okay, in pound CAD. And as I said, these liquidity gaps, okay, that we're looking at on the price action on the higher time frame. So if I pull back up onto the daily, you see we have a liquidity gap all the way back down to here, at least. And I really am expecting to see these gaps get filled in the months and probably years to come. We should see some really good strength coming out of the Canadian dollar, okay, as the world opens back up again. So what I'll do, I'll switch back to other screen and the other charts now. Let's have a look at what we have going on. So let's look at the interest rate and see what's happened. So if I load up FX Street quickly, let's see. So continue here. All right. So while I was waiting for that to load, I'm expecting the consensus to be the same. Now, usually when it comes to interest rates, for those of you new to trading especially, without doing your own research and looking at mathematical models, it's very clear to say if the consensus changes on interest rates, 9 times out of 10, the interest rate will change. Okay. Because I think they make it quite clear many times, the governors, of their intentions to increase interest rates. So it's not really a hidden secret. Okay. It's not something that you have to be on the inside to know if it's really going to change. You can actually tell from the speeches. And of course, as we teach in the Wealth Group Academy, how to read statements and etc. to help us understand, the decision of central banks, because at the end of the day, the central banks are the most important financial institutions or infrastructure that we need to pay attention to when it comes to currency or world currency. So if we look at what we have going along for, so interest rate, okay, staying the same as the consensus. All right. Now, as I said, even though the interest rates may stay the same, you will see price action sometimes do massive movements, or a massive amount of pips, even though the interest rates are stay the same, because there are other determining factors which contribute to the strength or weakness of a currency. So we have the interest rate, which is one thing, but then we have to consider whether we have quantitative easing taking place, or there's talks of quantitative tapering or reduction in the money supply, okay, and things like that, which will all affect how the price will move in. So if I pull up the report now, the report should be available in the Bank of Canada. So if I go onto the website, let's have a look and see if we can grab it. All right, so it should be automatically published here. Let's see if we can get this. So publications, interest rates, let's see, monetary policy reports. So I think automatically view announcement the moment it's published. Okay, it's published here now. So as we can see here, let's have a look. I believe we can click on this and get ourselves in. So I accept the cookies. All right, let's have a look here and load this up. So this is fresh off the press. Okay, it's just come out. And so the Bank of Canada held its overnight rate target, of course, with a lower bound of 0.25%, with the bank rate at 0.5%, and the deposit rate at 0.25%. Okay, so roughly around the same figures. As you can see here, it's very clear because of the global economy effects of COVID-19. There's an unevenness in regions and sectors, as we've discussed. Okay, so it's very similar things. Now, there is a PDF version that we can download, but we can just use the website. Now, I would say if you want to study and understand how to really understand the language of central banks, it'll be very good for you to analyze these. Now, I'll be doing some breakdown analysis on these things later on. But I would say definitely when it comes to the global economy right now with the effects of COVID-19, it's very clear that there is an unevenness in regions and sectors of the world. Some sectors are out of lockdown, some can go to the gym. For me, being in the UK right now, for anyone that knows me, I'm an avid gym guy, and we haven't been able to go to the gym for a very long time. So it's been a bit of an unfun journey here, but for us, we have a different situation going on from other parts of the world where they can go to the gym. So looking at this breakdown, very, very simple statement, only a few lines, but all the important parts are what we need to see here. Now, you can see new fiscal stimulus will increase US consumption. And this is what I was just saying, with the US stimulus coming out and more money being pumped back into the economy, or printed out, I should say, out. What we do see is that we'll definitely see an increase in the amount of US consumption and therefore output growth as a result. Okay. And because the US and Canada are right next to each other, border each other, across many, many different parts of each respective country, it's very easy for oil to be transported. So if you think about it from a practical standpoint, America's going to be demanding a lot more oil, and therefore Canada's going to provide a lot more oil. And so we should see the prices increase, and therefore this is what we may see now. That's why USD CAD is an important um, currency pair to look at, okay, because you can really see a lot of what the intentions of the future are if you can read the price well enough. Okay, so global yield curves have steepened. Okay, and largely reflecting to the improved US outlook growth, but the global financial conditions remain highly accommodative, which is understandable. Okay, and oil and commodity prices have risen. However, they're saying that the Canadian dollar has been relatively stable against the US dollar, but has appreciated against most currencies. Okay. And this is an important factor. As you can see, it's very clear that they're letting us know that the strength has increased quite a lot over many other currencies. And with the USD CAD is slightly different how it would behave, because the US dollar is a consumer currency rather than a commodity currency, because it's used in order to purchase commodities. For those of you who know 1974, the petrodollar situation, for you to be able to buy many commodities, you need to buy them in US dollar denominated, um, in US dollar denominated currency. Okay, so for that reason, okay, the supply and demand for US dollars is very different to every other currency, and so you may see different features on USD CAD than you may see on, let's say, the pound versus the Canadian dollar. Okay, so this is one thing to be very highly aware of when you are observing price action in this manner. Okay, so moving forward, when we look at the price action of the Canadian dollar against other pairs, I do expect there to be some pullbacks as necessary, but overall I'm very bullish on the Canadian dollar. So to finish this off, some of the most important things that we need to look at here is that whilst economic prospects have improved, as it says, and the governing council judges the recovery continues to require extraordinary monetary policy support. Now, in other words, what this really means is that there's going to have to be a lot of bailouts, possibly stimulus, local stimulus to different banks and etc. Quite a few different pieces of infrastructure put in place to support the economy through this bumpy time. So as you can see, without me having to read it, you can see a quantitative easing program, okay, will continue its quantitative easing program until the recovery is well underway. Okay, so in other words, this is where we may not see the complete massive bullish run, because this quantitative easing is going to kind of hold back the Canadian dollar from its full potential in some regards, because there'll be this constant devaluing of the currency itself, okay, due to the fact that they're printing more of it. Okay, now it doesn't mean that the currency will become massively weak, but it just means that we have this kind of, you know, overall push, but then slight pullbacks in strength because of this necessity in having to, print out more money. Okay, so this is what we have going forward. A very, very nice statement, very well, set. Okay, and I believe that looking at the different features we have here is very clear where, you know, the Canadian dollar is going to go. So moving forward from this, how we are going to approach the Canadian dollar will be very dependent, of course, on your analysis, your technical analysis, and what you do with the price action. But I believe we should see this very strong force. Now, I was just quietly reading this, and it says that the Central Bank of Canada has maintained its extraordinary forward guidance, reinforced and supplemented by its quantitative easing program. Now, without going into central bank stuff too deeply, because I don't want to bring the conspiracy theory stuff. Well, it's not conspiracy, it's a fact, but it's sounding conspiracy theory sounding stuff. Okay. All central banks can really do since 1971 and the gold standard system where the gold standard system was removed by President Nixon, there's not really much any central bank can do, because there's an inherent problem with all currency. They're not backed by anything solid. Like before, we had a backing by gold. The US dollar was backed by gold in the US dollar convertibility system, like you've heard me teach, I'm sure. But even though we have that system in place, the biggest problem is that every currency after that situation is not backed by dollars, but rather backed by financial figures and economic figures, which is not enough to really give, or I mean, it's not really enough to really give currency value. Okay, and so all banks, central banks can do is to print more money and just create more policies. And every time there's a problem, print more money, because there's nothing else they can really do, because the system is inherently broken. Okay, which is a whole nother topic. But whenever you hear, forward guidance and these terminologies, just remember that most likely there's a quantitative easing program involved, because that's the only thing that they really can do, unless they change the complete system of currency and put it back to what it should be, where gold should be, the currency should be backed by something with intrinsic value or store of value like gold. Okay, so that's really my thoughts when it comes to looking at the Canadian dollar from this perspective. All right, I will be sharing more. I'm not really doing a deep technical analysis, but let's just have a look at the trades that I was looking at today. So coming back to what we have, let's have a look to see. Now I'm in the Canadian dollar trade using algorithmic levels. The algorithmic level I'm looking at is right around here. Okay, looking at areas of where the price should behave. Now the entry you got is right by the top here, and you can see that the price spiked very near to the stop loss, but wouldn't run it. At the moment, the price seems to be selling off quite well. I think this is quite a good entry. All right, my expectation for the target is, now the market's opened, as I said, with this structure here of a double bottom, but because the double bottom is formed, we have a liquidity pool. Now, retail trading, sadly, as I was saying before, teaches you that a double bottom is a sign of reversal, and temporarily it is, but what you really find is that it's just an area where they can create, the market makers, the powers that be, can create liquidity pools to draw the price back down again and stop everybody out and lead everybody to believe that the price is going to sell. Because I do think that we are going to get this kind of action here and then another long. Once these weekly lows are taken, I do think we will get a long before a short temporarily. So I'll be steering clear of it. So steering clear of trying to go long right now and rather wait for these lows to get taken. So this is a very small trade. Nothing special. The risk to reward on this is £6 for £81. So we're looking at about 1 to 12. Nothing massive, but still respectable. Okay. And what we just want to see from here is the price take these lows. So I'll probably give a trade update, but you can see that when it comes to reading the price action of charts, you don't want to go down the retail road. I've been there, I've lost a lot of money. you want to trade as though you're an institution, understanding the money behind the price. If you can understand that, then you can make money anywhere, because then you become very accurate, and also you become very aware of market manipulation, which is a highly important feature that you must be aware of when it comes to looking at price. So that trade went very well, and it should continue that way. I think I can drag my stops to even, so I think I might end off this video dragging my stops to even, as my fashion sometimes is. So drag stops to even. Okay, bring a bit lower. Here we go. Stops are at even. Okay, whatever happens with this trade now doesn't bother me at all. All right, now what I usually do with my stops to even is I drag, because I have a zero spread account or low spread account, I'll drag my stops just to past even just a little bit, so that I can recoup the commission that they charge me. Because if it's going to be zero drawdown, then let it be completely zero drawdown. So that's it really, guys. Not too heavy on the technical stuff, just looking at the price action from that degree. I may have a part 2 to this video and do probably some deeper technicals, but this is my view when it comes to the Canadian dollar. Okay, so I hope you guys enjoyed that, and take care.